Hey, if you're trying to build your credit history, save money, and get a whole bunch of points, I'm about to compare two options for you coming up. Hey, if you missed my live credit score boost training, don't worry, I got you. If you click the boost training link below, you'll be able to take part in that live training. Now, this training is for those of you that work long, hard days, and then you come home and you struggle trying to figure out what you're supposed to be doing to fix your credit. You don't know what to pay off and what not to pay off, what to dispute and what not to dispute, and you definitely don't know what you did wrong to make your score drop instead of increase. Now, what you'll learn by taking part in the training is my account identification process, which has saved my customers on average about $5,000 by not paying off accounts that would actually drop your credit score. I'm also going to share with you some accounts that have guaranteed approval, so you don't have to worry about if you'll get approved or denied, and these same accounts have helped my clients on average gain about 30 to 80 points. I'm also going to share with you my dispute process that I use that has given me an average account removal rate of about 13 accounts over a 90-day period. And not to mention, those of you that stay all the way to the end of the training, you're going to get a free gift which will help you with your credit disputing process. So if you're tired of going around in circles with your credit trying to figure out what to do, go ahead and click the link below for the boost training. I'll see you there. Hey everybody, Will Frazier here, your credit expert, bringing you the tips you need to get your credit back on track, because what goes down must come up. And if you don't want your credit score to drop 400 points, make sure you like this video, subscribe to the channel, and turn on notifications so you'll be notified of any new video I drop just like this. Okay, so as you saw in the title, that's a whole lot of points for a little bit of money. And what we're going to be doing today is comparing two options that can help you build up your credit, save some money, and get a good bit of points. But before we go look at those two options, I wanted to address a few questions so that you'll understand who this is for and how it will help you. So who is this for? It's for anybody that has a low credit score and needs to build credit. The reason why it's good for you if you have a low credit score is because they don't do a credit check. So there is absolutely no credit check for either of these options. So it can be good for you in regards to getting approved for something where it can be hard to find accounts that you can get approved for to even start building credit. And as I mentioned, these accounts are for those people that are trying to build credit. So if you need to build credit history, and just so you know, FICO, it takes about 6 months of you using credit. If you have not used any credit at all for the past 2 years, you have to use credit for at least 6 months as far as payment history goes in order to generate a credit score in the FICO system. So if you need help trying to build up your credit score and get some payment history on there, this is a good option for you. Now, another thing that you want to look at in regards to who this is for, this is going to help out those people the most who don't have any loans reporting on their credit report. Why? Because a part of your credit score is calculated based on you having different types of accounts. So if you are a person that doesn't have an active loan or hasn't had a loan on your credit report before, you will see the biggest boost in your credit score compared to others. If you already have loans reporting on your credit report, this may not help you as much. So I'm just saying, those of you that do not have any active loans on your credit report or have not had any, this will help you more than it will help others. So how else will this be helpful to your credit? I'm glad you asked. Not only is there no credit check, so you're pretty much guaranteed to get approved for it, and not only does it help you build up your payment history, which is 35% of your credit score, the largest portion of your credit score that's calculated, but it also reports to all 3 credit bureaus, both of these options that is. And at the same time, they have low payment options, which make it really easy. You also don't have to put any money in up front as far as a large lump sum of money to pay on like regular secured loans. And with this, you can actually save some money. And at the end of the time frame that you've been making the payments to build up your credit history, you can take that money out and actually have some money that you can use. Now let's go ahead and take a look at these two options that I'm talking about. So today, if you haven't already guessed, we're talking about Self-Lender and Credit Strong. Now, another thing you may be asking yourself is, are these companies legit companies that you should do business with? So I'm going to let you know that both of these companies are actually divisions of Austin Capital, which is a FDIC insured bank. So I can assure you they are legit companies to work with. Now, there are a lot of similarities between these two companies, but there are also some differences. Now, one of the major differences you can see right now, if you go to Self-Lender to get started, they basically start you off at the lowest amount with a $25 payment. Whereas over here on Credit Strong, the lowest amount that you can get started with is just $15 a month. Now, there are also administrative fees that you would have to pay to get started. With Self-Lender, they do charge $9. And if we go over here to Credit Strong, we can see that they charge $15 administrative fee, so it is a little bit more upfront on the administrative fee that you pay to get started. Now, as you can see down here with Self, it does say it does report to all 3 bureaus. It is FDIC insured, and you can pay off the loan and close it early, and that's with either of these options, and you won't have any penalty if you do close these loans early. Now, the reason for that is because it is not a traditional loan where you get all of the money up front and then you pay back that loan to the bank. Again, you're just starting off with an administrative fee, then you're making the monthly payment, and then that money with Self is going to be going into a CD, a certificate of deposit, while at Credit Strong it's going to be going into a savings account. Now, does that make a big difference for your credit or anything else? Not really, but they just use 2 different products to store that money that you're paying into them. So if you do stop paying them, then you basically won't have any more payments reported. So when it comes to using these accounts, as I mentioned, FICO takes about 6 months to calculate a score from you based on your payment history that you have established over 6 months. So you would at least want to be paying on any one of these accounts for 6 months to a year, just to build up your credit, or just until you have gotten to the goal that you have for your credit. Whether that be a number that you're trying to reach, or you're trying to get a house or a car, something like that. And another reason why you want to wait until you have reached that goal is because when you do close a loan, it can cause your credit score to drop temporarily. So be mindful that it's a good idea to keep using these until you reach your goal and have applied for what you need to apply for and have secured whatever it is you're trying to get. And as you can see over here with Self, you can come and move this slider where you can change your payment amount, and it will also change the terms here for you, and you can see how much you would actually pay over time. When it comes to Credit Strong, they actually have various different options on how much you want to be putting towards your payment monthly and how much you want to do as far as your term overall. And they have different fees and interest rates depending on that, so it can cost you differently depending on what you're trying to do. Now, one thing to keep in mind, they do have different sets or categories of plans that you can choose. The subscribe plan is going to be for those of you that just want a low cost monthly payment to start building up your credit, but it's not necessarily going to be for those of you that actually want to save a good bit of money too. Because of the payment amount that you're paying and the term that they have on this, which is 120 months, which is 10 years, it would actually not be favorable to you to save money on this plan, but the Build and Save plan does award you a higher monthly payment, but it will help you to save more money while you're going through the process if you want to try to build credit and save a little bit more money while you're going through that process. Now, this Magnum plan that they have, according to what they say, it is basically supposed to help you get higher dollar amounts reported on your credit report to try to help you as far as getting credit in a commercial realm or for business purposes. I don't fully know that having your personal credit built up with higher loan amounts will actually help you with that. It may actually help you if you're trying to get a high dollar amount vehicle and they do see that you have paid off high amounts, high dollar amounts, and high total loan amounts on your personal credit, because this would report to your personal credit even though they're telling you to use it towards business purposes. And now, as far as these two companies go, they are both good options. It's just a matter of what you're trying to do, which one you want to choose. Like I said, they're both divisions of Austin Capital, so they are both legit companies to use to build up your credit. Neither of them will do a credit check, so you don't have to worry about an inquiry. You do have to be at least 18 and be a US citizen, and just a few other things in order to get approved. They will ask for your social because they do have to verify your identity and who you are, but that doesn't mean that they're going to do a credit check, because they did say on their sites they do no credit check. And this can give you an option to build up credit history for at least 6 to 12 months while you're trying to achieve your goal, and you might be able to save a little bit of money at the same time. And don't forget to get the score increases that these two companies have self-reported saying that their customers on average receive. Then you would want to be that person that has not had a loan or that doesn't have an active loan reporting on their credit report right now, and that will help increase your chances of being able to see those large increases that they do say that they've seen from their average customer. Now, if you need more options to try to build your credit, whether it be credit cards or whatnot, I'm gonna link a playlist which is actually gonna help you get access to some other accounts that will help you on your credit building journey. And if you've used Self or Credit Strong and seen any benefits from it, make sure you leave that in the comments and let everybody else know. But other than that, I'll see you guys next time.